So should we buy or sell this ETF? So first off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So I have this category called specific strategies. It's a bit of a mixed bag here. So we have an ETF that's, gives you moderate asset allocation, in terms of risk. We do see that it's at the lows, and we see a minus 11-ish% pullback from the highs. So here is the chart, weekly data points, big picture. We do see that there's been a pretty substantial uptrend. We also see that it does have these time cycles. The issue with the time cycles is that they have differed a bit in duration. You see that these time cycles, they fit relatively well, even going far back here, you got rise, decline, rise, decline, rise, decline, rise, decline, but recently the time cycles have been a bit off, because we have had this major rounding top pattern. So the key event at the moment is the red 200 week moving average. You see that back here, it was relevant as let me just draw that in so it becomes super clear. I got the nice drawing tool. So the 200 week moving average in red, it's been decent support level, but we can also see that it can be a very key resistance level. And this here is, right way back in 2015, 2016. Then we do get a nice rally. You see this period here as well. You do see that this moving average is a very, very big deal. Nice level to buy. You clearly see that there's clean interaction between price and the moving average. So the reason why this one popped up on my radar is that we currently have a situation that is very close to testing the red 200 week moving average. The most recent thing is that it has been this key support level. So here we tested 1, 2, 3, 4 times until we got, a very substantial rally. So I think the primary assumption is that it will function as a support level. The big but is that if we do break below it, like we did back here, you can clearly see that it can become a level that is very nice to the bears to short. But anyway, this is a very nice moving average to use for technical investing. Here are the daily data points, and we are just way below literally all the moving averages. The thing is that this is a mature rounding top. So sure, the bears are still in control, but they have done a lot of damage already, so yeah, so the best time to go short was back here, in later 2021. Now it has been the less sophisticated bears getting into it, similar to how you have the most fancy bulls here near the lows, and as the security climbs, the bulls get less and less sophisticated. And the bulls that buy like up here, those are like the YOLO bulls. Okay. So looking at RSI, looking at the entire history of this ETF, weekly data points, this is a level that many times have been bought and sometimes formed very good lows. Like back here, we got initially a bounce, pulled back a bit lower, and then we got a big rally. Let's go a bit further back. So here you can see that this RSI formed a key low. And also in terms of the PPO, which measures the distance between price and various moving averages here to the left. Looking at the daily data points, I get a very similar message. What's interesting here when you look at the accumulation distribution is that we do have a bit of a bullish divergence. So let's get here to the laboratory. So the thing is that I think the line in the sand here is 200 WMA support. It had a good track record. So in terms of giving the technicals a rating, I will give the bulls the benefit of the doubt here. We haven't yet touched, however, the 200 weekly moving average, so I will be a bit conservative here by giving the bulls 3. So next we go to the seasonality. So here is the seasonality. So to the right here, looking at the average seasonality, over the last 5 years in green, bullish, 7 years in blue, bullish. Then you have the last 10 years here in red. So let's get the measurement. Yeah, the coming time leading up towards mid-June-ish, and also a bit later here into August, early August, it's overall bullish for this ETF. Looking to the left, over the last 5 years, I think you can see it quite clearly yourself. The seasonality is very much bullish. So from April to August, it gets better and better. That's shorter term. If we go here to the last 10 years, you do get something similar. April is bullish, May, June, July, August are all pretty bullish. In the last 15 years, then it's a bit different because you do see that April, and we are not done with April yet. So April is actually, it is the strongest month when you both look at average performance and, the fact that we close higher 86% of the time. May, paradoxically, is one of the weakest months. In terms of giving the seasonality a bit of a rating here, I do think I will give the bulls a 5. This overall looks good for the bulls. Next, we look at fundamentals. Here I am comparing the AOM, the moderate allocation ETF, with the S&P 500. So year to date, reasonably close to each other, some outperformance from the S&P 500. Beta, however, is much, much lower for the ETF we focus on, and that is something that a lot of investors like. Problem is that the PE is actually higher than the S&P. So if the PE was lower, then it would be like, oh, very interesting, but it actually isn't. The dividend yield is also just a bit higher than the S&P. So the problem is that this ETF, it doesn't really check the boxes that the moderate investor want to see. So even though the name is moderate allocation ETF, there are some issues here in how it is structured. Yeah, okay, so here you can see the holdings, so only 9, but you can see here that there are ETFs here. Having ETFs in an ETF, it can be a bit. Let's actually look at the expense ratio is actually not that bad. So 0.15, that actually is a very good expense ratio given that it has ETFs in it. And when you have an ETF with ETFs in it, then the expense ratio can become atrocious, but that is not the case here. Okay, so here you can see the structure. It has international bonds at 16%, international stocks 20%, 24% US listed stocks, and then US listed bonds 39%. So in terms of the fundamentals, the only really interesting thing I saw here was the beta was much lower, but the problem is that when you have a higher PE, mediocre dividend, it doesn't check the boxes that the fundamental investor bulls want to see. So I will actually give this one to the bears, not in like a spectacular way, but I think I will give the bears -2. Next we look at relative performance. Here is the raw long-term correlation between the ETF and the S&P 500. 95%, 98% with the WT, and that is the total stock market ETF. Then -13% with BNDX, which is the bond market ETF. Then -69% with the dollar index. Daily data points. 65% with S&P 500, 91% with WT. But then interestingly, we do have a 91% all of a sudden positive with the BNDX, and -82% here with the dollar index. But looking long and short term, definitively the strongest correlation we do get here is VT. So even though this is a diversified ETF, it is very tied to the stock market long term and short term, as you can see. So here is the VT. So the interesting thing here about the VT is that we are currently testing the blue 100-week moving average. I think you can see quite clearly yourself that boom, boom, these were pretty good times to buy the VT. Here as well, it worked. So the 100-week moving average, it does have a pretty good track record. So this is interesting, but we do also have a major rounding top here on the VT. So it is possible that we do get a bit of a bounce. But the bigger picture is still very much bearish. Here is the relationship between the AOM ETF, moderate allocation ETF, and the WT total stock market ETF. Yeah, we have seen lower highs and lower lows. Throughout this downtrend, there have been quite a few times where we have had these rounding-ish bottoms. Here we have a rounding-ish bottom, here we have a rounding-ish bottom, and also currently. Historically, they do have a bit of a track record of working out, meaning it is possible that we can enter a bit of a time where the AOM outperforms the WT. If we go here to the daily data points. So looking here at the seasonality over the last 10 years, we usually see underperformance from AOM towards 6th of June. When we look here at the last 7 years in blue, yeah, we do tend to underperform here towards, actually throughout, also over the last 5 years in green. Yeah, so seasonality, it's a bit problematic. So we do have a bit of a conflict here between the chart and the seasonality. Then let's look at VT against the S&P 500. Yeah, so the total stock market ETF has underperformed the S&P 500 for a long time, many years. Throughout this downtrend, there have been, a few times where you have had outperformance, temporary outperformance that is. So it is possible for that to happen, given that the previous times where it happened, it was after a bit of a protracted downtrend. Let's see whether there are time cycles. I'm a bit uncertain. Let's look. There are some, these are, relatively clean-ish time cycles. It does suggest that it is possible to have some outperformance here from the VT. But the primary trend is that periods of outperformance from the VT are bounces within the primary downtrend. Seasonality is bearish over the last 10, 7, and also 5 years. So we do have a bit of a conflict here on the relative performance analysis between the technicals and the seasonality. I do think I will lean again a bit in favor of the technicals, but given that there was such a conflict, I can't really give the Bulls a big win, but I give them a 2 here. I think it's pretty interesting also that we did see on the VT a 100 weekly moving average support. So we have a good reason to expect at least a bounce here. Obviously, if we do not get the bounce, then that is pretty darn bad, because that means that the bears are very aggressive and that the bulls just do not have faith. And if the bulls start to panic and refuse to buy even longer term moving averages, then that can definitively become a self-reinforcing feedback loop. We do end up with a score here of 2. The key part of the bullish thesis is 200 weekly moving average support for the AOM. So it's a very important moving average. It's could also be very beneficial to the bears here if we do get below it. But definitively, we do have very interesting times now in the market. The market is very much vacillating between bullish and bearish narratives. Looking very big picture, we are definitively very, very, very due a major bear market. Bear markets, they do happen, and they especially tend to happen after a very protracted bull market. We definitively see bear market tendencies on the VT and also the moderate allocation ETF. It's important to just be aware of that even in a bear market, you have very strong rallies. As a matter of fact, some of the most ferocious rallies we tend to see, that's in bear markets. So even in a full bore bear market, official bear market where the S&P also is in full bore bear mode, it is very dangerous to be 100% short or 100% bearish. So yeah, whatever you do, of course, you want to use stops. You want to be market neutral, and if you have $19 to spare, then get VIP access.